I'm going to backtest the LCE model in real time and walk you through every single setup and how I'd actually trade it. This is not going to be about cherry-picked winners or perfect examples, just a full raw week of trading with the entire process from start to finish, what I'm looking for, what I'd take, what I'd avoid, and the reasoning behind every decision. And once you've watched the system repeat itself, something clicks. It gets easier to trust, easier to execute. Your confidence grows, your consistency grows, and suddenly you're in that upward spiral traders never reach because they keep changing their rules every week. So before we jump into Monday, here are some ground rules for the way I trade LCE. Number 1. Every trade must follow the LCE model and be a level-to-level move, of course. Number 2. I only trade regular market hours, 9:30 a.m. to 4 p.m. Eastern, but realistically, I'm done before noon on most days. Number 3. I only trade breakouts. And that just means that I wait for price to break into a supply and demand level and trade with the trend, not against it. And number 4. Risk stays identical on every trade. I don't oversize when I'm confident or shrink down when I'm scared. Risk is always the same size. And we'll be backtesting ES futures, with the most recent week at the time of this recording being November 17th to November 21st. And just a quick disclaimer, none of this is financial advice. I'm just showing you what works for me. If you choose to use it, do it responsibly and size correctly. All right, let's start with Monday. We're going to start at the 1 hour to establish our bias and then work our way down to the execution time frame, which is the 5-minute. So on the 1 hour, we're going to assess the overall cloud direction. In this case, it's sloping down and firmly bearish. We had an attempt to break higher here, but we weren't able to hold above the cloud and broke lower again. This means our bias overall is bearish. Next, we want to go down to the 30-minute. And on the 30-minute, we see that the cloud was kind of flat before, but recently got bearish again. Next, we have the 15-minute, which paints a similar story to the 30-minute. The cloud was choppy recently, and then flipped bearish. So our bias for the higher time frames is bearish. And what we're looking for here is a continued move lower. Now we just set our alerts at both the lower and higher level. If it hits the lower level, we're going to enter a short, since it aligns with our bias. If it hits the higher level, then we're not going to enter a trade right away since it doesn't align with the higher time frame bias. We would need to wait and see what the market does, and maybe reposition our alerts. So once our alerts are set, we simply wait for one of them to hit. And here we see that the price broke to the level above. Now we don't want to do anything here just yet. We're right in the middle of a range, and we still have a long-term bearish bias. We don't want to trade against the trend or against momentum. We simply need to add new alerts and wait for those to hit. We'll put one at the level above and one at the level below. Now we see that the lower level hit. This one is aligned with the overall bias, so we can enter short, place our stop above market structure and target the level below, then wait for it to play out. And for this specific trade, it would have been a little more difficult to enter properly because the middle was so choppy. If you did enter early and then got stopped out here, you had one more shot to go short following our 2-strike rule. Not every trade, even if it's aligned with the trend, will go in your direction immediately, and it won't always be super clean either. Then we had a few more high-quality shorts here that played out later in the day if you missed that first trade. These were breakouts that aligned with the overall bias, so they were good trades to take. That's for Monday's action. Now let's move on to Tuesday. Starting with the 1 hour, we see that the cloud is firmly bearish. It's sloping down heavily and in a strong downtrend, and also not too far from the price. This tells us that our bias should be bearish, and we should primarily be looking for shorts. The 30-minute tells us a similar story, with the cloud being bearish, of course. We can also expect the 15-minute to be bearish, based on the higher time frame cloud and overall market structure. So we drop to the 5-minute, which is somewhat flat, and set our alerts at both the upper and lower level, and then wait. And we see that the price first has a brief surge higher, then starts breaking lower in the next few candles. We now reach the bottom level and can take the short since it aligns with our bias. So we enter short, place our stop above market structure, and target the level below. By the way, If you want to learn how to place your stops and targets accurately, I go into more detail in a video that I'll link right now for you to watch later. Then we just wait for this trade to play out. And this one drops to target pretty quickly. So we've had our one trade for the day that's aligned with the bias, making it an A+ setup. The rest of the day was pretty much chop without much trending movement. Now let's go to Wednesday. Starting with the 1 hour, we see that the cloud is still bearish from yesterday, although slightly weaker. We see that the cloud is sort of flattening, and market structure tells us we're in more of a range now compared to yesterday, with more higher highs and lows forming here. The downtrend is less clear than yesterday. Now this doesn't automatically make it bullish or that it's going to reverse. It just means that bias is less strong to either side, so we're less certain of direction. Although we should still be bearish overall, since the cloud is still sloping down. We just need to be more cautious. So let's zoom into the 30-minute. And on the 30-minute, we could see the weaker bearish cloud even more clearly. It was firmly bearish before, but it's now starting to flatten, and looks like it might even flip. Let's drop down to the 15-minute to see if it confirms the range as well. And yes, the 15-minute does also confirm the range. The cloud here is even turning a little bullish with the recent upswing. Now let's go down to our execution time frame. Our execution time frame tells us the same thing. We're right in the middle of a range with no clear direction. We don't have a bias now to either side. The higher time frame is lightly bearish, and the lower time frame has no direction at all. So we set our alerts at both the upper and lower level and wait. And the price dipped a little before surging into the upper level. Now here, we don't have a strong bias, so this can't be an A+ setup by definition. It doesn't mean that we can't have a good level-to-level move. It'll just have less certainty. If you're strictly looking for A+ setups, then you'd pass on this trade. But if you want to risk it, you could go long here based on momentum and target the next level. And that would look something like this. Now moving on to the later moves in the day, we see that the price fails to move higher and collapses on itself, mainly due to the fact that the 1 hour cloud is not bullish yet, so there isn't enough structure for the price to move higher on its own. It's common for moves to collapse on themselves when they have no structure, which is why I place so much emphasis on making sure that the cloud and market structure support the move to ensure that it's an A+ setup. So if you wanted to trade that move, there were two potential trades here, although neither of them was A+, because there was no clear trend alignment. They're B-level setups, but still valid trades. So no A+ trades on Wednesday, which means you would have either taken no trades or one of these setups. Let's go to Thursday. Now, Thursday is a little interesting. We see that the price had a strong surge overnight, which made the cloud flip bullish. We now even have a bit of cloud development on the bullish side, with the cloud sloping up. However, we need to keep something in mind. The cloud isn't following the price closely. Because think about it, when we're setting our alerts and looking for a trade, we're going to be looking for a break higher into the next level or a break lower into the next level. If we look for a break higher, since our bias should be bullish, that means that we'll be 3 full levels away from the cloud. This is not like Monday where the cloud was closely following the price. So we need to be much more cautious here and wait for confirmation. Let's go down to the execution time frame and set our alerts. Now we see that the price surged to the upper level, but we don't necessarily want to take this trade just yet because of the price's distance from the cloud. We should either avoid it entirely or wait for more structure so that the cloud can catch up. Then we see that the price failed to move higher here and is dropping heavily. This was similar to yesterday, where the move collapsed on itself since it had no structural support. The price is now an elastic that's been stretched too far and is snapping back. So just like yesterday, we can look to take the short back down. Although this isn't an A+ setup, of course. This is just based on current momentum. And by the way, if you want to learn how to execute this process in the real market, that's exactly what we do inside the LCE accelerator. We run weekly calls to keep your entries, stops, and targets clean, and you'll have a private one-on-one chat with me so you can get feedback anytime. You'll also get access to my supply and demand chart, a custom indicator, and a community of traders who all follow the same system and hold each other accountable. If you're interested, the link is below. So now we're at Friday. The 1 hour cloud is bearish from yesterday's move, so our bias is bearish. Let's zoom into the lower time frames to get more confirmation. On the 30-minute, we see that the cloud is also bearish, but it's flattening a little bit. So that might indicate a little weakness in the bearish trend. And on the 15-minute, we kind of see the same thing. The price is above the cloud, and the cloud is flat. So we don't have a clean bias just yet. This is very similar to Wednesday so far. If we drop to our execution time frame, we see indecision and lack of direction once again. So this is already looking like a no-trade day, or a no-trade morning at least, until we get some structure that would justify a move up or down. There are currently no A-plus setups or potential A-plus setups. So we set some alerts and wait to see what happens. Now we see that the price dropped into a lower level and then surged higher. There were a few B-level trades to take here, but nothing A-plus so far. Since the higher time frame trend is bearish overall, we can't expect an A-plus setup on the long side, but we can take a few B-level trades here based on short-term cloud momentum. Just be careful as they can collapse easily, and that essentially sums up Friday. So we didn't have any A-plus trades here by definition, although a few B-level trades. So for this week, we see that we didn't get too many A-plus trades. We got one on Monday and one on Tuesday. The rest of the week had some good setups, but none of them were A+. So you want to make sure you focus on getting the A+ trades nailed down. They're relatively easy to spot and trade. Then you can incorporate a few B-level setups, depending on how confident you are in them. Or you can choose not to and only go for the A+ setups. Remember, we really only need 5 to 10 A+ setups a month to get a very good return on our account. So that's how you want to approach a week like this. You'll have some excellent weeks, and also some slower weeks as you've seen now. The only way to last is staying consistent through all of it, regardless of what the market throws at you. I'll link some other back-tested weeks here so you can see what that looks like. Now, if you want to start trading this way, be sure to check out the link below to join the LCE accelerator. And if this video helped you, let me know by leaving a like and subscribing, and I'll drop more videos like this. I'll see you in the next one.